Hey guys, how's it going? Welcome to the London session recap for Thursday, the 10th of March, 2022. Obviously had, quite a big volatile pullback yesterday, or quite an impulsive pullback, I should say, which, if you map 4-hour structure the same way I do, counting that as the last swing breaker structure, then that would be the 4-hour swing high, right? And this would be the 4-hour low. So we've pretty much pulled all the way back up to the extreme. However, as you probably saw in my pre-session analysis, I'm not overly convinced or in love with classifying this as a swing pullback. It's all a little bit messy. It's a little bit tricky to read with the uptick in volatility unless we kind of stick to those clear and simple mechanical rules. So if we are now using 80 pips, right, that's obviously more than 80 pip pullback. With multiple candles, and then that led to that breaker structure. This was less than 80 pips, right? And now we've had that pullback. So yes, technically we have now pulled back to almost the extreme for our supply. So we could expect that 4-hour lower high to form and continue to the downside, which could happen. I'm kind of using or saying a little bit of my expectations, I guess, on the market here, that because we've had such a strong daily reaction from that extreme weekly and daily demand, I'm expecting we'll probably pull back up to, at least sort of the premium of this daily range. That's kind of what I've got my eyes on. There's not really any daily supply here. We can obviously see a little bit of a reaction, but yeah, there's nothing there that's valid. So then back into the 4-hour chart, we have these sort of two supply zones. Again, not in love with them. They're kind of, quite corrective. The distal of this current supply zone was already tapped into, right? Supply was created, that broke the low, price pulled back into it, filled up some of the orders that then led to this move. So of course, until price actually trades through it, the zone is still valid and there can still be orders within here, but typically, we don't expect it to have or cause as big of a move or a reaction. Same as this one. This one's obviously a little bit better because it's higher up. It is more of the extreme, but right, it was created and then we pulled back into it. The next few candles, filled up the majority of those orders and then continue down, right? So don't really love any of this. It's all quite corrective, but nonetheless, right, we can still look for entries within here. As we can see, price has started to pull back. So my current frame of thinking is that I think it will just be a bit of a reaction to then continue up higher. The exact same thing may occur here, right? But with that said, if we keep things very, very mechanical, we have come into our extreme 4-hour supply. The 4-hour is still bearish, so there is always the possibility, right, we could continue to sell off from here then on. I'm just kind of putting a little bit of my my home directional bias into here, right, that I think it would just be a bit of a pullback, whether it's to here, down to here, or wherever, right, further, and then we kind of will get that internal higher low to then continue up higher, up into the premium, but we shall see. So that's why it's still worth taking from shorts, because of course it can turn into that bigger trade. So yeah, if we jump down into the M15, and zoom in a little bit. So we essentially mitigated the top of that 4-hour range, and then we had the change of character was within here because that was the pullback. It then just about took the high and then took the low of the inside bar, but obviously we have a much even clearer sort of internal breaker structure here, and then we started to have that pullback. We tapped into this decisional doji during the Asia session. Just gonna zoom in a little bit. And then very, very corrective pullback. So as we're coming into London, I think price was around this point here. So this is how you have to read it, right? We've come into that sort of extreme 4-hour supply. We've clearly, having a decent amount of bearish momentum to the downside. We've reacted off a decisional demand, but look how corrective this is, right? It's almost sweep, impulse, correction, impulse, right? Very, very, very slow correction, essentially building all of that liquidity to target. Right, so this is why then it becomes, although it's counter to the M15 trend, this becomes a very decent area in which to look for shorts. Yes, there's no inducement, however, it did sweep that inside bar. So for me, that is a valid sweep. It's not the best one in the world, right? I much prefer it where you get a clear sweep of a high like that. But for me, a sweep of an inside bar is valid. And then obviously there's not really anything unmitigated above it, right? There's no clear zones, it's all been mitigated. So this kind of was the level that was going to hold. Most likely, we were going to continue to either see that pullback down into the extreme demand or potentially even reverse, okay? Another thing that was sort of, not discretion, but reading it with, just kind of paying attention to a little bit of the nuanced details, is that this was, a 27 pip or so pullback. So, that's a decent bit of structure, and we had broken and closed below that, right? So that's another sort of, I guess, a little bit of confluence that adds also to looking for those counter trend shorts from this level, right? Because there is that potential now that potentially, we could see that true sort of M15 break of structure. But all in all, I really liked the characteristics of price. Impulse down, correction, impulse down, very, very slow corrective pullback into here. Session timing, session open, that looks like a pretty decent level to short, even just targeting this low, right? Very decent risk reward, and then to the extreme demand, whether we can then look for longs, which we've now had that change of character. And right, in normal situations, I would then be looking for longs from within here if it was within session. But obviously we had, that one big volatile news announcement, straight up, straight back down, sweeping that liquidity, etc. I'm not looking to get involved or buy from here. Really, I would want to see how it shapes up into New York. But we also have the ECB rate announcement. So that's a Euro rate announcement at 12:45 p.m. GMT. So in a few hours, and then that would be followed by the press conference 45 minutes after that at 1:30 GMT. 1:30 p.m. GMT. So generally, we definitely will not be looking for trades before or during that, and most likely that's going to cause quite a big move. And I don't very, very rarely trade off the big news announcements just because price is quite volatile. I like for kind of price to calm down, form some new clear structure and new clear ranges, and then come back and attack that the next London or New York session. So it's very unlikely I'm going to be looking to trade now for the rest of the day. I'll personally be coming back for London to tomorrow. So yeah, hopefully you guys can that's the way I view the M15. Very, very clear opportunity to look for counter trend shorts if counter M15 trend trading is within your plan. If it's not, obviously you were waiting for the longs from down here, from this being the strong swing low, right? Nice inducement, etc. This would have been beautiful if it wasn't just for obviously news kind of messing that up a little bit. So then if we take a look at the M1, just move this back to the old 4-hour chart. How did this look? So literally as well, another kind of thing might be a bit useful is when kind of London session is starting up like this and prices around here, I literally set my alert at this POI, I set my alert at that low, just to be aware of it when price breaks it, and then I have my alert set on this POI. So really I'm just looking for a trade to short from here, and then looking for a potential trade to long from here. That's it. Not getting involved in any of this low probability mess in the middle. There is just no need, okay? Now, one thing that happened as well that was really nice inducement for this POI, because obviously it didn't have any inducement here, was that this high here, right? See how it broke sort of this low? So this move broke some form of structure, which then creates nice liquidity behind the high. Price then takes up or sweeps that liquidity into the POI, right? Which we know increases the probability of the POI holding, and then we can look to target all of that, right? So that was a nice, decent bit of liquidity that formed below our POI. So if I zoom right in now, so then alert obviously goes off once our M15 POI is hit. So then I'm obviously looking for our standard M1 entry model. What's even higher probability would be ideal is if price hits our M1 POI. Now you could have been waiting for price to hit into here, but technically what do we need? We need a bullish candle that's then engulfed by a bearish candle. You can see we have that bullish candle, but then the next bearish candle doesn't break and close below this bullish candle, it only wicks below. So you can either leave it like this, right, use a little bit of discretion, that's what I do obviously a lot of times, or you can move it to the next candle that does then get engulfed by this candle. However, it's a bearish candle by a bearish candle, right, whereas the true strict definition should be a bullish candle by a bearish candle, okay? Or what you can do is then evolve it to this, because what would that be? That would be your M2 candle, right? Which we can then see is your true supply zone, because it's the bullish candle that's then broken and closed below by the bearish candle, right? Or you can literally just view it then as the range, right? The buy to sell range. That's essentially how you're reading different time frames without having to go up there. So that mitigates that buy to sell range. Beautiful V-shaped reaction after sweeping that M15 high. And then obviously we get our chock down here, right? That's being the last pullback. All of those candles break the prior candle's high. So that's the low that needs to go for change of character. Now, at this point here, when price is around here, and you're looking to get short, there's kind of three POIs you can be looking at. One, you have this buy to sell here, which flips this level, but it doesn't sweep any liquidity, right? It's just one straight movement down. It doesn't even, sweep the liquidity behind that candle. Because another thing I see, and this is something I'm really trying to dig into at the moment, actually, I'm trying to figure this out about liquidity sweeps and kind of what my mechanical view is on them. I don't kind of want to confuse anyone here, but this is just something I'm digging into a lot at the moment, is let's imagine that from an internal structure perspective, right? All of these candles break the prior candle's low, right? However, what can sometimes happen is you can have a movement like this, but say this candle here, the top of its wick takes the wick of that candle. Right, so even though all of the lows of the candles will break the prior candle's low, so from a structural perspective that is one down movement, but sometimes you can get that, and also this candle does move up and takes the high of it. So what that would be on a lower time frame would be a clear sweep of that high. But obviously from a structural perspective, that's not a structural high because it's just one movement, right? What you want to see is that, and then it take the high and then go. Okay, so some of you who are new either to Photon or to this style of trading, don't worry if this is a little bit overwhelming, but for some of you who kind of hopefully do understand what I'm going on about, that's just something I'm trying to dig into at the moment. But in this case, there's literally no argument for a sweep because one, all of these candles break the prior candle's low, so it is one structural down move. But two, obviously this candle doesn't, it doesn't come anywhere near that, it doesn't sweep it. So this isn't a sweep, it doesn't have any inducement. So all this is a flip that led to a chock, okay? And there's unmitigated POIs behind it. So this is why I did not like, or I wasn't going to set an M1 order on it. I would have wanted to see price come into it and then give me a confirmation entry of that level, and then I'd be happy to hit it. Okay, or for some of you who use seconds, of course, you can drop down to the seconds, right, and then trade a seconds reaction from here. So that's the first POI. This is the one obviously price reacted from, but that's why I didn't take that trade or get entered into it. Second one we have then is similar. We have another flip here, right? Price reacting from this M1 demand level. Right, so price comes in, reacts, and then that would be a flip. Now, this one does sweep by the rules that I use because if it has an inside bar, for me, that's essentially a range, right? Because price comes down, it ranges, and then price essentially sweeps the high of that range and then goes, but it happens within one candle. So for me, that is technically a sweep. It's not the clearest. I would much love clearer ones where you have a clear movement like that, but for me, it counts. So that would be a sweep, then obviously you can enter anywhere from the base of the reaction, right, to the top of the reaction, or of course, you can refine it to the candle, right? It's up to you. Either way, your stop needs to be above that high there. But yeah, price never came back up to it. And then the final one would have been the extreme, which is obviously always going to be generally the highest probability because if you're wrong, then you're only wrong once and then it's going to break higher and the whole zone's failed anyway. So they're kind of the three POIs you can be looking at. The extreme, this flip here, let's just draw it refined, right? That for me is a valid sweep. Or this one here, which for me was kind of the lowest probability just because it didn't sweep and had no inducement. But yeah, price reacted to the decisional, so it is what it is. You got to stick to your rules, 9 times out of 10, or maybe not 9 times out of 10, but a lot of times you'll take losses on those, especially when there's, a couple of unmitigated supply levels behind it. So it is what it is, price swept that, then it flipped to this level here. Again, it had an inside bar and a pullback, right? So so it sweeps the high and then drops down. So then you could have been looking at this as the flip. Obviously price was quite volatile and it dumped off, so yeah, there were no entries. It is what it is. And then there was one very, very aggressive continuation that you could have played further down where we reacted from this extreme demand. Again, for me, this counts as a sweep. We had these inside bars, right? Because price pulls up, it comes down, sweeps that liquidity, flips the demand, so supply is now in control, and now you have a sweep zone. There isn't any inducement, which isn't great, but yeah, that's the very aggressive entry. Aggressive mainly because it's further in the run. There's obviously unmitigated stuff behind, but more so the pricing of where you're entering. You're entering right, essentially at the break of this low here, and straight into this strong M15 low, right? This demand. So for me, I'm kind of happy to leave at that point. Once I missed the high probability setup, missed it in terms of didn't get in the move, but it's not a missed trade because it doesn't meet my plan really. Yes, I do trade flips that don't sweep, so it's a bit of a tricky one because in some ways it does meet my plan, but when there's two unmitigated supply levels behind it, this one swept, this is the extreme, there's no inducement from it. I didn't have a lot of confidence, so I was happy to play a confirmation entry from there, but obviously on the M1 it tapped into it and dumped, so the only way you could have got in really on that one is if you trade the seconds. So yeah, once we're pretty much at the M15 POI, then I'm just waiting for the long to set up, but the M1 stays bearish the entire time. Then we come into it, right, and then yeah, the news event happened, right. Obviously headlines coming across with rhetoric over in Russia and Ukraine, so it is what it is. At that point, when you have a candle like that, I don't trade when it's like this. I wait for price to break out essentially of that range, right? Because you've had a big rejection, right? This is just mess in the middle. You're going to get chopped around. Generally, stay away from that. Or at least I haven't found an edge, or I haven't Admittedly, I haven't really tried to dig into and find an edge when you have these big news candles, because I'm just happy to wait around and wait for those ranges to be broken out of, and wait for price to give me clearer and more decisive structure, so I know there's clear high time frame intentions behind what I'm trying to trade, right? Which is like this morning, right? This is super clean price action to play a counter trend move. Just unfortunately didn't quite line up with how I wanted to trade it, and then came into here, and then the news kind of spoiled that. So now we've got ECB coming up and whatnot. It's very unlikely I'll be looking for any more entries, but it'd be interesting to see from a hard time frame perspective, right? Are we just getting a little bit of a reaction from this 4-hour supply to pull back into one of these 3 sort of 4-hour demand levels, to then continue up higher and then get that larger move? Or potentially are we now going to reverse and actually take out that 4-hour week low? Well, we can just keep it simple, focus on what the M15 is telling us, and if you map structure the same way I have, this in theory should be a strong low, so potentially we'll push deeper into the zone, into the extreme, and then potentially get some entries to then take out these highs up into the next 4-hour supply zone, and then again where you can look for some counter trend shorts, or potentially we are then going to switch bearish, okay, and then we can then look for price to pull back in and then look for those movements there. The only thing I'll say about that, and this is where it gets a little bit tricky, right, when you have conflicting time frames, well, not conflicting, because if we do switch bearish in the M15, then both the M15 and the 4-hour will be aligned. They will all be bearish at that point. But because I'm expecting that bigger daily pullback, right, I would also be open to looking for longs from within here, right, anticipating that potentially the M15 only switched bearish to mitigate these 4-hour demand zones, right, to then push up higher and have that deeper daily pullback. So this is where you just have to be a little bit more nimble, or like I said, keep it super simple, stick to the beginner trade plan, focus only on those pro M15 trend trades, and then just be patient and wait for those setups, when hopefully news doesn't mess it up too much. But it's just the environment within at the moment. You just have to be patient and just stick to it, right? We're getting a lot cleaner price action these last few days and this week compared to the prior few weeks, so you will be rewarded if you remain disciplined and stick to that. But yeah, please don't take any trades now, or at least until after the ECB news is out of the way. Okay, have a good day, and I'll speak to you next one. Cheers, guys.